Welcome, welcome, welcome. Dale is saying, hello Tian, navigating skills of new terrain improving. Audio-visual issue seems to be diminished. Screensaver feature plus. All in all, a net plus for me. That's great. Thank you, Dale. Thank you, Clayton. John, welcome. Welcome, welcome, welcome. Right, fundamental announcements will be the topic of today's lesson, and I'm going to discuss trading days and trending days. Right, now we have 20 trading days, and every 20 trading days there tends to be 10 average daily trading range days, 5 above average daily trading range days. These typically have fundamental announcements making the markets move approximately 1.5 times the average daily trading range. Now there are an average of 5 below average daily trading range days, and these can be government or bank holidays, and it's hard to determine in advance which days will be average or below average. Right, so there we have each box represents a day in the market, and there we had the average daily trading range days, and there we have an above average daily trading range day, and these are below the average daily trading range. Now, fundamental announcements in the USA. There's a few fundamental announcements that will have an impact on the market, such as the Chicago PMI, consumer confidence, consumer price index. That is a measure of inflation. And yesterday we had the actually the consumer price index of the UK released, and that was much better than expected. It was expected the forecast was 2.1, and then it came out 2.3, much higher than expected. And we saw a massive jump on the pound pairs. Let me just open up one of the pound pairs here. Let's take the pound Australian dollar, for instance. Let's take that out. There we go. And that announcement was released about, let's just see when that was released, 11:30. So that was, if our times are in Eastern Standard, on the charts, that was 5:30 Eastern Standard Time. So 5:30 Eastern Standard Time was over there. There we go. That was the 5:30 Eastern Standard candle. So the market broke out to the upside, then consolidated a bit, and then just started moving to the upside again. Okay, very interesting. And if we have a look at the, where's the daily encapsulation? There we go, daily encapsulation. So this was a above average daily trading range day where the market moved 271 pips. Okay, very, very interesting. So you can see that the market was moving within its average daily trading range, and because of that fundamental announcement, the market moved much higher. Right, just type a Myra yes if you are with me up to this point. On fundamental announcement days, the market could move substantially. Right. Then we have durable goods orders, the employment situation. The employment figure coming out in the US is quite a serious movement. It's a significant fundamental announcement that will most probably cause a lot of volatility. The non-farm payrolls as well, existing home sales, GDP, gross domestic product, new home sales, fully fed index. The producer price index is also a measure of inflation, but it doesn't have such a significant impact than the consumer price index. And then we have retail sales, and then the FOMC statement, which is the Federal Open Market Committee. Right, so typically after an interest rate is announced, the FOMC will release a statement, and then when that statement comes out, the market also moves because it gives investors an indication of the future stance of the Federal Reserve. Right, now fundamentals in 3 trading sessions. We have the Asian session, we have the European session, and then we have the US session. Countries to pay attention to with fundamental announcements: every 24 hours there are 3 trading sessions. The Asian session, and that ranges from 5 p.m. Eastern Standard Time to 6 a.m. Eastern Standard Time, and then the European session ranges from 2 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time, and then the US session ranges from 8 a.m. Eastern Standard Time to 5 p.m. Eastern Standard Time. World economies. Now, approximately 75% of forex trading transactions are facilitated during the European session, which includes London. That's why the active zone is the European session, and we are very fortunate to trade the London session of the Analysts on Demand because that's where the market moves the most. Now, trading in foreign exchange markets averaged $5.3 trillion per day in April 2013. This is up from $4 trillion per day in April 2010 and $3 trillion in April 2007. The majority of the daily transactions are done within the 7 major world currencies, and retail traders typically trade the 6 major world currencies against each other. So there we go: pound, euro, Australian dollar, dollar Swiss or US dollar, and then the Swiss franc, the Japanese yen, Canadian dollar, and the New Zealand dollar. Now, there are 2 types of trading days. Firstly, a trading day and then a trending day. Now, a trading day typically develops when there's no fundamental announcements. Currency charts will tend to move the average daily trading range, whatever it may be, 60, 90 or 120 pips, depending on the currency. The market will usually create what is called an upper or lower bell curve during the 8-hour trading session and have a tendency to retrace back near the opening price. Trading days appear to be thin, or what's also referred to as light, in volume. Novice traders prefer trading days as the market is typically more predictable, and expert traders, however, prefer trending days over trading days because it's possible to make more money in less time. Now, trading days create upper or lower bell curves. So if you have a trading day and that's the opening price, the market will move up, right, hit a high, and then start to retrace towards the opening price again. So it returns back towards the opening price at the end of the session, and there you see your bell curve, right? Then if we get to trending days typically have fundamental announcements, trending days. It's in this type of environment where the market will tend to take off in a direction after the announcement and move usually 1.5 times the daily trading range. For example, if the daily trading range is 120 pips, the market may move 180 pips or more depending on the fundamental announcement. For most fundamental announcement or trending days, the market can trend for an extended period of time and will tend not to return back near the opening price. Consolidation or bracketing in a chart is a potential sign that a fundamental announcement is about to take place. Traders are waiting for the announcement before taking any new positions. After the announcement, if there's a percentage change from the previous report, there will usually be a breakout from that consolidation, as you see below. So there we go. The market was consolidating a little bit, and then the fundamental announcement came out, and then we saw a breakout. Okay, so in this particular chart, a buying frenzy ensued and prices broke out to the north. So trending days or fundamental announcement days, the market breaks out in a direction and doesn't return towards the opening price. There we go. It doesn't return towards the opening price. Let's see what we have from the pound US dollar yesterday. And that announcement came out at 5:30. This one actually started to move at 4:30. So this one started to move before that announcement. Amazing. Okay, quite interesting. Tapumari, yes, if you can see that the market was moving up almost as if that figures from the announcement was leaked. And then the announcement came out and it carried on moving up. So it wouldn't have been possible to trade this announcement because there was no consolidation before the announcement. Quite interesting, eh? Okay, Andrew says, have you accounted for daylight savings time? Yes, I have. Eastern Standard Time it's now 5:15 in the morning Eastern Standard Time. And that announcement came out at 5:30 in the morning Eastern Standard Time. That's why I was looking back, but it wasn't the case. This one was moving beforehand. Very interesting. Okay, so that's one of those exceptional cases where the market has been moving before the time. Right, now Forex fundamental tips. If the fundamental announcement has little or no change, the market will more than likely be an average trading day and move within the average trading range on the currency you are trading. If the fundamental announcement has a significant change, the market will more than likely be an above average trading day and move 1.5 times the average trading range. Now, there are usually three figures: the anticipated figure, the actual, and the adjusted or revised figure, which takes place approximately 10 minutes after the announcement. If the adjusted is significantly different than the actual, the market may move in the opposite direction. Fundamental announcement schedule times and dates are subject to change at any time per the government schedule, but will be listed on the economic calendar, which you can find at forextips.com. So let's just go and open up that economic calendar at forextips.com. There we go. I'm going to copy and paste the link in your chat box as well. forextips.com/forex economic calendar. There we go. And we can see today, Wednesday, the 22nd of March, we have a meeting from the European Central Bank. We have the European current account coming out. And then in the US session later, we have mortgage applications, the housing price index, existing home sales. And then later today at 4 p.m. Eastern Standard Time, we will have an interest rate decision from the Reserve Bank of New Zealand. And that will have a significant impact on the New Zealand dollar pairs. And it's quite a high impact announcement. Now the previous announcement, let's see, when was the previous announcement? That was the 8th of February. Right, let's go and have a look at that. At 4 p.m. Let's have a look at the New Zealand dollar, US dollar. Robert is asking what time Eastern Standard Time? 4 p.m. Eastern Standard Time. Let's go back to the 8th of February. Let's see if I can scroll back to that date. I don't have enough data. Let me load a little bit more. The rate announcement will be 4 p.m. Eastern Standard Time, Robert. 4 o'clock in the afternoon. So there was the rate announcement the last time from the Reserve Bank of New Zealand, 4 p.m. There we go, 4 p.m. Right, so the announcement came out and this one fell. Let's see the daily encapsulation here. Okay, there we go. So the announcement came out and this one actually, because the our charts, a new day starts at 5 p.m. an hour after that the new day started, but that was a down move for the whole day from the high to the low for about 93 pips, which is quite substantial from the New Zealand dollar US dollar because it is a slow moving currency pair. It's got a low daily trading range. Quite interesting. Right. Where was I here? Right, there are usually three figures. The anticipated figure. Okay, no. FOMC statements are usually made by the Federal Reserve Chairman. You must listen very closely to what's being read during the entire statement, as investors react quickly and the market can move all over or whiplash. Right, not all fundamental announcements move the market. Banks are largely considered fundamental traders. When the report is read, they aggressively start trading. If the announcement or the report doesn't have a change in economic value for the currency, the market will not break out and will continue to move in the direction of the previous trend. If an announcement from a previous trading session moved the market to a new value and now new announcements reflect its new value, the market doesn't move or continues moving in its previous direction. If there's no breakout, the market has a high percentage chance of continuing in the direction of the previous trend, fulfilling the ABCD wave movement. Now, it's MTI's experience that fundamental announcements exist to fulfill the ABCDs in the Fibonacci sequence faster. The Fibonacci numbers in ABCD sequence do not exist to fulfill the fundamental announcements. And here's a few traders' tips. If the market breaks out of consolidation and returns back into consolidation beyond the middle of the consolidation, it has a high percentage chance of going the other way. There are times the market consolidates in front of a numerical or Fibonacci target, breaks out of the consolidation, hits the target, and then goes the other way. You may want your stop order at the low or high to be a stop reverse order. If the stop order is too far away and you can't afford the loss, then don't trade. Listen to the chart. The chart will tell you the majority of the time which direction the market is going to go. Do not marry a trade. Be quick to turn from a bull to a bear or from a bear to a bull. Strategize several scenarios before you trade. Use the if-then approach. If the market breaks out of consolidation and returns back into consolidation beyond the middle of consolidation, it has a high percentage chance of going the other way. You may want your stop order at the low or high to be a stop reverse order. If the stop order is too far away and you can't afford the loss, then don't trade. So there's the consolidation before the fundamental announcement. If the market breaks out of that consolidation and returns back into consolidation and it moves above the middle of that consolidation, then it will typically reverse. And look at that, how the market reversed. Okay, just type a wire yes if everybody's with me up to this point. Okay, great stuff. Right. Now, if you want to trade a fundamental announcement, turn to a 15-minute chart and then 10 minutes before the announcement, draw a line over the resistance and under support for the last 12 candles or 3 hours. Wait 15 minutes until any portion of the body of a bullish candle has closed on the north side of resistance or the body of a bearish candle has closed on the south side of support. Let's go and have a look at the interest rate announcement from the United States last week. Okay, I can't go back in time. I'm going to have to look at the Forex Factory When was that? I think that was last week Wednesday. Let's see. There we go. FOMC statement and the federal funds rate. And that was 8 p.m. Eastern Standard Time last week, Wednesday, March the 15th. So let's open up US dollar. Let's take the US dollar yen. And open up a 15-minute chart, 15th of March. That was the 15th of March. Oh, actually, sorry, that was 8 p.m. my time, South African time. So that came out at 2 p.m. Eastern Standard. Right over there. Right, so that was the interest rate announcement. US interest rate announcement. And we can see that after that the market came down with about 140 pips, which was quite substantial. And if we go back to the manual says turn to a 15-minute chart, and then 10 minutes before the announcement, draw a line over the resistance and under support for the last 12 candles or 3 hours. So let's go back just to before the announcement. 3 hours before that time was 11 a.m. There's 11 a.m. And that is the high, and that is the low. There we go. The high and the low 3 hours prior to the announcement. The high and the low. Right, is everybody with me up to this point? Just let me know. You see that's the high and the low 3 hours before the announcement. Then wait 15 minutes until any portion of the body of a bullish candle has closed on the north side of resistance, or the body of a bearish candle has closed on the south side of support. So then the announcement came out and we got a breakout to the downside. And there a bearish candle closed below support. Closed below support. There we go. And then if we go back to the manual, after the candle closes, enter the market buying or selling. So the candle closed over there, so I would place a sell at 113.97. There. And then your protective stop, if you are buying, is 10 pips below support, and if you are selling, it's 15 pips above the resistance. And that was the high of resistance, right? So that was resistance. And 15 pips above that resistance is 114.92 there. So that would have been the stop. There we go. If we go back to the manual, the manual says figure out the daily trading range for that currency and exit 10 pips before the market hits the daily trading range. Okay, so what was the daily trading range? Let me just add the daily trading range. And the daily trading range was 88 pips. Okay, let's type it here. The DTR was 88 pips. And the manual says figure out the daily trading range for that currency and exit 10 pips before the market hits the daily trading range. However, with major fundamental announcements, the daily trading range can be calculated 1.5 times the average daily trading range. So 1.5 times the average daily trading range would be, let's work this one out, 132 pips. Right? So exit 10 pips before the market hits that daily trading range. Now if we have a look at the daily encapsulation, the day actually started over here. Over there. Right? And by the time I got triggered with a sell, this one already moved 90 pips. So I could actually just target 132 pips minus 90. So I could actually just target 42 pips. Right, 42 pips. So I had to sell over here and then target only 42 pips, and that would have been 113.55. 113.55. Okay, so it's moved quite a lot after the breakout. If it didn't move that much, I could have gone for more, but to stick to the rules, I had to exit over here. So that would have been the target. And I tell you what, if I had to trade this fundamental announcement on my own personal trading account, I would have passed. Just because for the mere fact that I was risking 95 pips to make only 42 pips. That just doesn't make sense. But if I was risking 42 pips to make 95, I would have gone for this trade. Okay. But what I want to illustrate here is how we would trade fundamental announcements. So just type a wire yes if you are with me with regards to trading fundamental announcements, how to actually look for a buy or sell after the fundamental announcement. Is everybody with me up to this point? Okay, good stuff. Right, let's carry on. Oh, and we actually finished with the lesson. Let's have a look at another fundamental announcement. Where was a significant fundamental announcement that came out? Okay, the pound moved before that announcement, so I can't look at that one. Let's go back. When did we see the payrolls figure from the US? That was Friday, the 10th of March, and that came out 3:30 p.m. Let's go and have a look at that. Friday, the 10th of March. It came out at 3:30 p.m. There's the 10th of March. Oh, that was 3:30 p.m. my time. Sorry, I keep on forgetting. If it was 3:30 p.m., let me just go back here. Oh, and I can't go back. Let me just change the time zone here for X Factory. Eastern Standard Time. There we go. Save this one. Okay, right. Now I can go back to the 10th of March. There we go. So that was 9:30 a.m. Eastern Standard Time. So 9:30 a.m. was right over there. That was the 9:30 a.m. candle. Okay, so let's see what this announcement did. There we go. US payrolls figure was released. There. And before the announcement, the market, 3 hours before that time, was 6:30 a.m. There we go, 6:30. And this was the high, and that was the low before the announcement. The high. Let me just change that color. Let's make it green. And that was the low. Okay, 3 hours before the time. Indicate the high and the low. Let's just go back to the manual. Wait for the breakout, and after the candle closes, enter the market buying or selling. So that candle over there moved below the low. So we saw a bearish breakout. So I would have entered at the close of that candle with a sell at 114.99. So the sell would have been over there. And the stop would have been 15 pips above the high. Now 15 pips above the high is 115.64. There. Also looks like this announcement didn't really break out substantially. Okay, anyway, so that was about a 64 pip risk. So what was the daily trading range here? It was 90 pips. And the day already started over there, and that was the high of the day. So by the time I entered, the market already moved down with 50 pips. So I could actually just target 30 pips over here. So to risk 30 pips, to be rewarded with 30 pips but risking 64, I would have passed on this trade as well. Can you see that I would have passed on this trade? Okay. I suppose we can go back more in time and have a look at other fundamentals, but as long as you understand the nitty-gritty of trading a fundamental announcement, you can actually try this later today when we see the fundamental announcement from, in the form of the interest rate announcement from the Reserve Bank of New Zealand. And then maybe you can try that on a currency pair with a high daily trading range, for instance, the Euro New Zealand dollar. Okay, let's go and have a look at the Euro New Zealand dollar. The last time that New Zealand came out with a rate announcement, and that was the 8th of February. Let me just load more bars of memory over here. The 8th of February. That was the 8th of February. And that announcement was 4 p.m. Eastern Standard. And 4 p.m. was over there. That was 4 p.m. Right, let me just zoom out here. There we go. Oh, actually, I think that's what Andrew said earlier. You know, on the 8th of February, daylight savings time did not kick in, so I'm going to have to go 1 hour back. Right, so that announcement actually came out at 3 p.m. Okay, so that's when the announcement came out. Right, and prior to the announcement, and we can see the daily trading range on the Euro New Zealand dollar is actually much higher than the New Zealand dollar US dollar. The daily trading range there is 122 pips. Okay, so you can make more pips. Now, 3 hours before the time was noon. There. So this was the high, and that was the low. Actually, that was the candle before the announcement. So that was the high. Okay, so I should have placed my stop 10 pips below the low at 1.4604. That would have been the stop. Stop is over there. And then my buy would have been at the close of that candle that broke out of that consolidation range, and that would have been 1.4709 over there. And let me just add the daily encapsulation over here. This one already moved. By the time I entered with that buy, 141 pips for that day. So it moved even more than the daily trading range. So again, the market was reacting before that announcement came out. So I would have passed on this one. Robert says, looks like it would be better to just trade the high of the 3-hour block and calculate 1.5 times the daily trading range. Well, the thing is, you're going to have to start at the day. You're going to have to start calculating your daily trading range from the low or the high of the day. So I wouldn't do it from that block. I think it's just a coincidence that all 3 examples that I used today didn't work out. Okay, but this was quite a substantial move. I mean, there was the eventual U-turn. So after the announcement, the market moved up with 146 pips still. Quite substantial. And remember, we saw the Euro New Zealand dollar move during February. Just it knew only one way, and that was up. Okay, guys, thank you for joining me for today's lesson on fundamental announcements. And thank you for your participation. Unfortunately, we've now come to an end. But looking forward, there is a fundamental announcement coming out from New Zealand later today, so you can apply the fundamental announcement strategy, but I would apply this on a currency pair with a high daily trading range. So if I was going to trade the New Zealand dollar announcement, I would either trade the pound New Zealand dollar and I would trade the euro New Zealand dollar. Okay, because those pairs have high daily trading ranges. Okay, great stuff. Thank you guys. Thank you everybody for joining. And I'm going to see you back in the Analyst on Demand in the next 15 minutes. Cheers.